Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Thanks everybody guys, let's take a look again on the cable today, because on euro currency, as you can see, market mostly stands in the same consolidation of the flag pattern on the daily chart. Well, we have two inside sessions currently, so not much to talk about in euro. Still need some clarity to get. Maybe the Wyoming speech of the Jerome Powell will change something. While on the cable, currently we have more interesting situation because we actually talked about it in the weekly report, and currently we have the progress of the situation that led us to better estimate what the price action could follow. In general, our major conclusion on the weekly analysis suggests that yes, in the nearest term, market could show moderate pullback, but it will be temporal, mostly reaction on the resistance that we have. But potentially, once this temporal retracement will be over, market could proceed high to the 136 area, and only after that the major pullback could start. So this is our major view currently, and at this moment we're dealing mostly with the first stage, and the first step of this setup is this moderate short-term retracement. Most probable destination point we see in this level, and first support 28.78, but potentially we do not exclude that that could be somewhere to confluence, maybe 127 area, slightly lower. That's also possible, but currently we are focused on this area. And if you remember, in the weekend we said it is difficult to suggest how particular the upper direction could start with the forming of this minor hand and shoulders. As you can see, it's right top of the shoulder should be formed, and it was the concern how the market turned up. On the 4-hour time frame chart, we had two targets. We started our discussion right here, and we said, well, market could reach the OP and then reestablish upper direction, or we could get the proceeding right down to the 127x OP, where the neckline stands, and after that, market could start upper direction. So here you could see that yesterday with this pullback, that should be treated as kind of the bread and butter, but it's not. Wasn't purely bread and butter in the Jordan terms. It just was retracement somewhere to 30% of this drop, and then indeed market has dropped precisely to the OP. Now, as you can see, reaction on the OP has happened, and take a look. Market is forming the bearish grabber. If this grabber will be confirmed by the price close of this candle, it's 4-hour time frame chart, guys, it really will be big chance that market could proceed indeed low, because grabbers suggest the taking out of these lows, and it means that next target will be somewhere around neckline. That creates the great chance for scalp traders. If you're searching chance to take the long position, you could consider this neckline support for a possible taking position, because here market could start reaction up and starts to form the right shoulder of our pattern right here. So that's the thing that we could consider. For those who would like to take the short position, theoretically you could try to take the short based on the grabber, but the target will be limited with this area. But our major setup stands, of course, based on these head and shoulders, and the best entry point will be somewhere around 3160, 3170, where potentially the top of the right arm should be formed. That theoretically that we have. So as you can see, some clarity is coming on the market. Now we see some patterns here, reaction on the OP that has been hit. Finally, guys, some theoretical part of this view of this research, I would like to return back to the idea of this pullback. Recall that we talked in the weekly report that keep an eye on some Jordan patterns, because on the hourly chart, if you remember, that was good thrust, and we said keep an eye on a possible double rip or maybe bread and butter trade. By nature, this pullback was the bread and butter actually, although it doesn't match to number of candles above the 3x3 moving average. But many traders, just following the ladder of the Jordan they could treat this as a double ripple. Guys, this is a very often mistake that I see as many traders just see the close above 3x3, close below the 3x3, they think that this is double repo. Absolutely not. Although here's the pullback was approximately double repo. Double repo hasn't reached the precise target. For the double repo, we need to see the capitulation of the bears, and this usually happens when the market tries to push price below the previous lows and then fail to do this. Here is just minor pullback after this initial upward action. This is not purely double repo buy pattern. So this usually very often leads to mistake because market just forming the ABC retracement trade, think that this is double repo and taking the long position, and then market reverse down and just drop further. So when you're dealing and you would like to trade the double repo, be sure that market definitely forms the capitulation of the bear. So actually, guys, here to the left, this is more the double repo than here, because take a look, market has dropped, close above the 3x3, close below, market was trying to push price lower, but has failed, and bulls takes the control over it. That was actually the point where the position could be taken, and then you can see reaction that has happened. This is how the double repo usually works. That is not good example of the double repo. Yes, it has worked somehow, leading to some retracement, but in most cases, when you see this kind of the double repo, when you do not have clear second bottom, this is a bad example, and it would be better to not trade it as a double repo pattern. So just a few things that I would like to pay attention to in the current situation, because it's a very suitable example to show you what is wrong with this setup. Not only just closing around it 3x3 is important, but more important is the price behavior that stands below it. And you could see definitely the market mechanics of the double repo. Market mechanics suggest failure of the bears to push price below the previous lows. If you see this type of action, if you do not have even some correct closing around 3x3, that could work as double repo. So that's what I would like to say about the current situation, and let's keep watching further what will happen with this scrubber once it will be completed. Well, in this case, we could get really downside action right here. If not, market starts upward action, and in this case, we probably could get the upward action right from this point. But I hope that we will get the scrubber.